At Whittier Trust, our investment philosophy emanates from our unique business focus to serve families by protecting and compounding wealth over multiple generations. Our investment philosophy centers on the long-term ownership of high-quality assets that are capable of compounding wealth over time. We believe that owning strong, well-managed companies helps mitigate risks, including the most critical to long-term investors, the permanent loss of capital. Volatility, in our view, is less of a concern than the potential for a permanent impairment, which is why our approach prioritizes owning high-quality businesses that not only survive economic cycles, but are competitively positioned to take market share in difficult operating environments. Warren Buffett popularized the idea of corporate moats nearly 40 years ago when, in an answer to a question, he said, "What we're trying to do is find a business with a wide and long-lasting moat around it, something that surrounds and protects a terrific economic castle with an honest lord in charge of the castle." But having a competitive advantage versus your competition is only part of the equation. Growth in difficult environments is a key characteristic of a quality business. Pro-entropic businesses don't just survive, but thrive during times of entropy and disorganized chaos, growing across economic and market cycles. Our clients have patient capital. Generational time horizons provide a stable foundation for long-term investing. Focusing on tax-efficient investing allows for the compounding of wealth over time. While Einstein is credited with calling compound interest the eighth wonder of the world, it was Charlie Munger that said, "The first rule of compounding is never interrupted unnecessarily." But in order to hold assets for long periods of time, quality is paramount. Owning high-quality assets can lead to strong risk-adjusted returns over the long term. And by prioritizing quality, it enables a higher strategic allocation to growth assets. Another benefit of owning quality businesses is that it mitigates real risk. The primary risk for the long-term investor is a permanent loss of capital, not market fluctuations. We place a greater emphasis on downside correlations and preservations of capital than simple measurements of volatility. Our equity portfolios strive to own quality businesses that exhibit three key characteristics: competitive positioning, capital compounding, and strong management. Our proprietary U.S. large cap equity strategy, Corporate America, epitomizes our investment philosophy, approach, and process. Our goal is to outperform over a full market cycle while mitigating downside risk. We combine our core philosophy of owning quality businesses at reasonable valuations and a long-term orientation, with our Chief Investment Officer's top-down macro views and the bottom-up fundamental security selection of our nearly 30-person investment team. We are a cohesive investment team, with most of the senior portfolio managers and analysts having worked together for more than a decade. The portfolio consists of our highest conviction, large-cap ideas, diversified across all 11 sectors. Our long-term orientation has resulted in low turnover, with 10-year-plus hold periods on average and companies that have grown earnings faster than the market. In fact, annual compound EPS growth has been 30% higher than the market on average. The result is a U.S. large-cap strategy with a 25-year track record of outperformance and a repeatable process that we believe delivers the best opportunity to compound wealth over time. We welcome the opportunity to discuss this in greater detail with you.